But this isn't a dilemma that Anup faces alone. The 8% home loan rate scheme started off by India's largest bank, the State Bank of India, set the ball rolling for a rate cut across the space. And that contributed to the spurt of home loan dispersals that egged on growth across sectors over the last few months.
By doing this, several things have happened which I think you are witness to. One is that the market for housing came back, right? Builders came back, buyers came back. And I think some of the offtake which has taken place in the steel, cement and associated sectors has happened only because of this.
Now the big worry is what happens next if rates were to really harden. For Anup and the thousands like him who cashed in on the 8% offer, there's a lot of uncertainty. Here's a look at how home loan rates have panned out over the last 8 years in comparison with benchmark repo rates. Between 2003 to 2008, the differential between repo rates and home loans have largely stayed at about 3 percentage points, with the exception of 2004, where the differential stood at 1.5%. Record low interest rates, especially in the home loan space, were responsible for a spurt in consumption that impacted every bit of the Indian economy. Policymakers will possibly be looking at this graph to take a decision on how to calibrate a hike in rates from here on. And the big question is, what happens to retail loan demand in such a scenario?
For the people who've already taken a loan at 8%, I don't think they should really be worried about it, because the majority of the impact cost for interest rates is going to be in the first or second year. So if they are at 8%, they are absolutely okay. Then people who are going to take new loans, those are the ones who are going to get affected, because they will see obviously a hike in the rate at which they are going to borrow.
But all players in the home loan market point out that even if rates go up, the latent demand for housing from the millions who still don't own their own home and their rising aspirations will ensure the demand is intact. And the story fueled by individual dreams and demand of an economy outgrowing the world will hold on no matter what, provided of course that prices are right.
Still with me, of course, Sumeet, Vaid and Atsi Seth. Atsi, 2013, 2012, where will rates be if you've taken a home loan?
They will certainly be higher than they are now. That's a given, I think. And depending on where we are in the cycle, I mean, if this cycle turns out to be shorter, and you'll have probably interest rates coming down.
Cycles are becoming very rapid.
Right, exactly.
That word. And that's scary.
That is scary. So certainly, if somebody's looking 5 years down the line or 3 years down the line, they will be higher.
Sumeet, you've done a lot of number crunching on this one. Now, how does the cycle work out, and what impact will it have on demand?
See, cycle has two impacts. One is when I'm taking a decision to purchase a home, so I'm sensitive to interest rate at that point of time. And the second and a bigger impact is when I've purchased a home through a home loan and interest rate starts going up, and that's where the situation or my cash flow starts getting impacted because I have not captured it in my calculation.
No, if I've already taken a home loan at 8.25 or 8%, what should I be doing? I mean, should I be keeping away money in the the possibility of the rates going up from here? I mean, what would you advise your clients?
Definitely plan your cash flow for a higher interest rate. Your expenses should be managed in a certain way whereby this outflow towards your EMI will keep on growing up for some point of time. And that's the scenario which we are advising all our clients on their financial plans.
Indians are new to this cycle, the rapidity of the cycle. Internationally, how is this played out?
I think here you take a leaf out of the financial community, financial planning community book, which is that don't take a floating rate loan if you believe that the next 3 or 4 years rates are going to continuously go up. Take a fixed rate because at least you'll know what your EMI are and what you can afford. But at the top, take it. So I think that's just, that makes sense. And secondly, as to the cycle, you're absolutely right. This is the first time for Indians, particularly homeowners, to be leveraged homeowners. But look at the last big country that went through this cycle and the lesson that it's taught us, keeping money too cheap. Perhaps, the people that interviewed don't recognize this, but this is sort of for our own good, that you don't want asset bubbles building by home loan rates being too low for too long. So I'll just say that.
I know. I mean, I think the US was a huge scare, 2007 in the subprime. Who can forget that? But Atsi, let's take it forward. Have we set the stage for a linear movement up from here, or do you think there could be dips along the way?
I think it really depends on liquidity, because finally, it's where the banks are getting their money from and what kind of money they're getting. So I think as long as deposit rates sort of don't hike up, they're already, as you said, they're rising a little bit, but as long as they're not crazy in terms of their escalation. And I would emphasize, as long as global liquidity also stays fairly comfortable, I don't see how you can charge in the private sector far more to other people. So, you'll be sending people abroad for borrowing if you don't keep your rates low.
So how do you see it panning out? And also, going forward, do you really see a very rapid increase in rates on the ground? Because to be fair, when the RBI brought down the rates, we were all complaining that banks didn't bring down their rates. So they have a comfortable margin out there.
See, I see from the lessons learned from this crisis out of US, somewhere a worrisome signal coming from regulatory point and even intelligentsia so-called, where we'll try and draw lessons from US very soon. And we'll go back to them and say, see what happened in US. I don't agree with that comparison at all. We're way off. We have not even started. I think we are what US was in 80s. So we need to give our country that much of scope, that much of leverage, so that they can come up and start, going up the consumption scale even at the real estate level. So that's first view which I have. Second view which I have is somewhere governments will have to play a much more socialist role when it comes to, housing. And that's a huge challenge in India. Bombay and Delhi slums are humongous. It needs, if we say this government is all about Aam Aadmi, please take care of my housing first, I cannot live in
But thankfully, the one thing that stood out after this crisis is affordable housing is the new mantra. From the condos to the affordable housing. So at least that has changed. But Sumeet, on the whole, just to wrap up this discussion, do you think hardening rates is going to hurt domestic consumption and you'd be worried? Is that a fair summation of what you think?
Very worried. I think it's a little bit too soon for us.
Atsi, you would disagree with that?
I would absolutely disagree.
So CRR hike of about 25 to 50 basis points, you say a thumbs up to that.
I say
you say a big thumbs down.
Yeah, very much.
Okay. And the debate continues, and the debate will continue all of the week. So stay tuned to Bloomberg UTV and Atsi and Sumeet. Thanks so much for joining us today.
Pleasure.
That's a wrap on this show. Thank you so much for joining us today. Goodbye.